Hello, everyone. Angelique Soto here from the Unqualified Buyers Pipeline, creditsnitch.com, the Smart Consumer Podcast. So I want to go on to talking about the 5 factors that affect a credit score. Why is this important? Because no one seems to understand how important they are to the health of your credit. Yeah. When I ask people, do you know that one late payment can sink your credit score up to 120 points? They're like, what? Huh? And I'm like, yeah, did you not know that? It's not like a 3 strikes you're out type of situation. It's like one and done. And if there's only one late payment that could ruin a credit score, imagine how many Americans have bad credit scores or low credit scores. I mean, I say bad, people take it personal. Low credit scores. Okay, a lot. And it's nothing to be ashamed of. And it's a conversation we need to start having in our households, in our communities, because not a lot of people are well versed in the information I'm about to give. So please lock in, open those those smartphones, get into your notes, and start taking notes because the teacher is in session. Okay, we're going to start with payment history. Payment history is 35% of your credit score. It is the highest rated percentage. So one late payment could sink your credit score up to 125 points. That's serious, guys, especially if you're not over in the 750s. Yeah, so be sure, to pay your bills on time. It's the most important part of your credit score. Missing one late payment will have a bigger negative impact than anything else. Okay, guys? So I often say to my clients, hey, rule of thumb is auto pay for minimum payment. But don't put the auto payment on the due date. Put it 7 days before the due date so you can catch it to at least 3 days, 3 days after it's supposed to debit, because a lot of times people saying, well, the auto debit didn't work. Well, you were supposed to put it 7 days before the due date so you could catch it. So we've got a safety net for the safety net. That's the first tip. The second tip is, say you're stealing from Peter to pay Paul and you don't have the money to make the minimum payment that month because it's just tight. You've overspent, you've mismanaged, or you just don't have the budget because you don't make enough money or whatever the case. I say to a lot of my clients, just put it on auto pay, and if it debits, you'll get a chargeback fee for $30 to $40. I'd rather you get a chargeback fee than a 7-year late payment on your credit report. Okay, so even if there's no money in the account, it will debit the account as a payment and it will charge back. You will be charged fees again, but it will not count as a late payment. All right. So this is for a lot of people who are in situations. Avoid those late payments, please. 35% is a lot. Then we're going to go into credit utilization, which is 30% of your score. Try to only use 30% of your available credit. Okay. For example, if you have 2 credit cards with a $10,000 total limit, try to keep your balances to $3,000 or lower. Okay. Why is this? Why is 30%, the point? Because credit institutions, financial institutions are looking in the algorithm, and the data reporting agencies are looking at how much you're spending in credit. If you go over 30%, it's an indicator that you are A, mismanaging your money, B, leveraging credit to exist in your current lifestyle. Therefore, you become a risk. Okay. And that's what these credit companies are all about, managing risk. So just keep that in mind. When you spend over 30% of your credit limit, you are going to face lower credit scores. So if you're going for a home or you're looking for a car and you want better rates, pay down your credit cards so that your credit score can be its highest. Okay. So that's the little secret there. Then we have credit history, which is 15% of your score. Keep your credit cards open even if you aren't using them anymore. And this is like a common mistake a lot of people make. Closing accounts will shorten your credit history, which will lower your credit score. Now, say there's a credit card you hate and it's just, it's a pain, it's high fees. I'm going to say wait until your credit score is at least to a 750 before you decide to close that credit card. Okay. And you better hope that that's not the majority of your payment history. Because what you're doing is when you close a credit card, you're literally cutting off all that juicy history, that credit worthiness. That one card could be potentially the length of your reputation. And that makes it difficult for a financial institution to measure whether or not you have credit worthiness. So I often say to my clients, please don't close any of your credit cards. What you can do is engage your credit cards every 5 months with a small purchase, whether it's $10 or $15. But don't forget, you must add auto pay on every single one of your credit cards, because there are sneaky little finance charges that sneak in, or annual payments that sneak in that you may be unaware of. And it happens to my clients all the time. So be sure, to keep these cards open, engage them every 5 months, or else they will close on their own, because if you don't use them, you lose them. That is how the financial institutions are. So your cutoff is really 6, but I'm going to say give 5 months. And if you can, since we are a smart credit world, a smartphone world, put it in your calendar. Put a reminder in there that says, hey, it's the 5th month. You need to pay, make a purchase on Berkeley's before it closes, and at least you know how to maintain that. Okay, guys? So don't forget, credit mix. That is the next percentage, which is 10% of your credit score. Try to keep your credit mix good. Different types of credit, like credit cards, student loans, auto loans, mortgages, they all count towards having a nice mix of credit. And that's 10% of your score. Okay, guys? So then we have new credit, 10%. Okay, so I say this to clients who have subpar credit scores and they need to bring up their scores a bit. Then I would say engage opening up a new credit card every 2 years. Okay, if you have a great credit score and a nice history, you don't have to worry about this, but I would say engage every now and then and and apply for a line of credit maybe every 3 to 4 years, so that you can get that new mix of credit going on. Also, I say to a lot of my clients, if you have that subpar credit score, every 2 years, you should pick a new credit card, and you should only be applying for 5 inquiries every 2 years. Okay, guys? 5. That's called hard inquiries. And what hard inquiries are is every time you engage your credit report to find out your credit worthiness so that they can supply you with a line of credit. So just, I say to a lot of my clients, rule of thumb is 2.5 inquiries every 2 years. So 2.5 credit cards, 2.5 approvals every year. Because anything more than 5 every 2 years, again, remember I told you the financial institutions like to talk? So the algorithm and all the data agencies are sharing information and saying, so-and-so just applied for 4 credit cards in 1 year. Guess what? That 10% is going to go down to like 2%, and they're going to talk about you. Your credit score is going to drop. Your chances of getting approved for another credit card are going to be slimmer. So please be very careful on how many credit cards you open in a year. There is a thing called soft pulls, and I tell everyone, if you could go for the pre-approval, that is your best bet. I really love how Discover has a pre-approval. I love how Navy Federal has a pre-approval, because by doing a pre-approval, it's like a sneak peek. Peekaboo, let me see if you're worthy, but I'm not going to steal one of your hard inquiries just to do a peekaboo. And then at that point, they will give you an approval. As a matter of fact, Capital One does it as well for cars and for credit cards as well. So those are the main companies that I really love, that they give you the peekaboo pre-approval. So keep that in mind. Pre-approvals are your best friend to keep inquiries and to see if you are worthy of their credit cards. So that's it. That's all for today. I just wanted to share these important 5 factors with you guys. Take them with you, flourish with them, and tune in again for more information on how you can be a smart consumer when it comes to credit. Angelique Soto here from CreditSnitch.com. If you need a consultation to maximize your credit, whether it's personal or business, I am here to help you. Girlfriend loves to see people win. Have a great one, guys.